Welcome to the TMT Stock Market Strategy video for Tuesday, March 22nd. Another inside day basically from Friday's price action. Very, very quiet. We were in a 15-minute range pretty much most of the day. And that tells you there's no new order flow, so stay away. And that's the reason why a lot of traders, they look to this 15-minute range. Once you get the opening, you either break out or you break down from that range, and that's where you get new order flow, new money coming into the markets. Doesn't matter what direction, but we did not do anything yesterday, and we just kind of stuck around pretty much most of the day. So was a ho-hum day yesterday, but this week I think there's going to be some fireworks. We have Apple, less than expected announcement on their products. Actually, it was a big disappointment. We have this terrible suicide bomber in Brussels, 13 people dead. So that's just horrific. It's terrible to hear that when you wake up in the morning. Markets are reacting a little bit. I'm not sure if that's going to be a catalyst or not, but my hearts and prayers go out to those in Brussels. And back to the markets, where we are looking for a little bit of some downside pressure here. We're getting some divergence in the markets. That does not mean it's a sell signal. Yes, we are extremely overbought. We're up over 5 weeks, going on 6 weeks now. So there's definitely a side of caution for long trades. However, the trend is still your friend, and you need to remain that way until the market does change direction. You don't want to just jump onto a short trade. I'm just sitting on the sidelines here waiting for price to tell me what direction it wants to go in. And if we do break the 15-minute low down here, then we'd be looking to sell rallies. And that's really what it comes down to. It right about here. If we take out the highs, then we're going to look to buy pullbacks. Just like this. Same thing, selling rallies and then headed lower. That's what we're looking at, okay? Remember, 15-minute range, big pivotal area here when you have the top and bottom. So pay attention to that. It does help. All right, now let's go right to the indexes. You could see the XLU, definitely a safe haven sector. And look what's happening. We are up, continually rallying up above this main pivot, which is now support. So that to me is always a cautionary red flag to say, well, why are the consumer staples, utilities, the REITs all well bid up? Well, to me that means that somebody's parking money there. There's a lot of people and traders and investors parking money in that area until we get the volatility subside. Well, volatility's here, and for those of you who know how to trade the volatility, a lot of opportunity, which is going to be fantastic, and I'm excited about that. We finally got some movement in the markets. Now, as you can see here, we had an inside day. Clearly in the spiders, and I'm just going to put that right here. You can see these 3 days we haven't gone really anywhere from Friday and Monday, so that's where we're looking at, either going to take out these highs or we're going to start to revert back to the downside. I am waiting cautiously, and I'm looking to see which direction it wants to go. I am not looking to pick a direction, but if from what I'm seeing on the technical picture, to me the path of least resistance will probably be lower first before we go up and higher. Now you can see here the supply, we have big overhead supply. You look at the volume profiles, large supply area here where there are many traders, investors that were trapped up here from back in December, and also you're going to have traders and investors that were buying down here. So when they get up to this point, what's going to happen? They're all going to start to sell, and I think that the next step is going to be to the downside. Do I know how deep? Not yet. I don't even know if we're going to go down, but from what I'm gathering, it looks like that we're pretty much ready to move to the downside. Post quadruple witching I mentioned last week does come to be bearish. So remember that going into the next few days. We are off here on Friday in the United States for Good Friday. So we only have 3 more days of trading. So you might want to think about any long trades. Be very cautious on, okay? Next, we're going to take a look at the IWM, the Russell 2000 ETF. Doing quite well, but definitely lagging the other indexes. And as well, it is still way below the 200-day moving average you can see here. Okay, so that's just another red flag. And then when you have all of these crappy little stocks that are rallying up with no balance sheet, that just tells me be careful. This might be the end of the move, at least in the short term. Do we go all the way down here? No, not necessarily, but we'll probably make some sort of an interim low, a higher low from this low, and then probably revert back up again. All right, and that's what I'm looking for going forward. And remember, things do change. Transport's looking fantastic. We did break out of this big long downtrend channel. So now let's see if this continues to have legs. I'd like to see a little consolidation above the 200, something like this. Take out an area of sideways consolidation and then move higher. Or remember, guys, it could revert back to the downside again. This definitely was helped by the FedEx earnings, so something to consider. I do like the way it's looking. Diamond, same thing, way, way, way above the 200-day moving average, but it is a lagging index to the other five that we follow. So I don't put too much emphasis on what the Dow Jones is doing. Next and last is going to be the Qs. Now, we had a big rally in Apple, right? Now, look what happened here. We have 1, 2, 3, 3-day consolidation inside day, virtually no movement in the Qs. Something's going to happen. So now either I understand that Apple has been reweighted as well, but it's still in lots of indexes. If Apple really starts to break down and start to really sell off, yesterday's product announcement was horrendous, guys. That I'm going to tell you was not good. There was nobody there. Only the employees were clapping, and they're not innovating any new product. They're just regurgitating what they have, making it smarter, making it larger, making it bigger, making it better. But there's no new product. So to me, I think Apple, for the time being, is done going up. I think the next step in Apple is going lower. So that's going to affect the Qs, going to affect the Dow, and going to affect the S&P 500. And that could put a little pressure, as well as existing home sales weren't so great yesterday. And then you have this horrific attack here in Brussels. You just got to use caution, because what happens is when the markets get up this fast and this far, okay, it will use, meaning investors and traders and long-term investors, will use an excuse to sell the market. So just use caution on the long side today. And remember, this week generally is a week following post quadruple witching. Hope it helps everybody. Have a great day. We'll speak to you tomorrow. Take care, everybody.